Good afternoon and welcome to our pre-budget special show. I'm Tumisho, Grater, and in the next hour we will be talking expectations. As we all know, in less than an hour's Finance Minister Pravin Gordhan is expected to announce his budget plans.
He managed South Africa through real expansion of borrowing, but this year, Pravin aims to curb spending, a balancing act to appease ratings agencies and clean up SOEs. This 2016, Pravin is back, presiding over our most important budget yet. Is this the year of measures and implementation of fiscal discipline and learning to live lean? This is the year of the whip, the year to live within our means. This is SA Budget 2016.
Well, I am joined by a panel of experts to give us their budget expectations. In studio with me right here in Johannesburg is Trudi, Makhaya, consulting economist at Mercantile Bank, Professor Christopher Malikane. He's Associate Professor of Economics at the University of Witwatersrand. And of course, joining us from our studios in Cape Town, we are joined by Deborah Tickle, the Director of International and Corporate Tax at KPMG. And later on, we will have Gulam Balim, who is the Chief Economist at Standard Bank. Good afternoon to all of you. Maybe let me start off in Cape Town with you, Deborah. Let's get a sense of what you will be looking at most in this year's budget speech when the Finance Minister takes to the podium at 2 o'clock today.
Thank you, Tumisho. I think the Finance Minister has a very difficult job in the sense that he needs to show that the reins of the finances are sitting in the Treasury. I see from a tax perspective that he will be needing to raise additional taxes, and I think he'll be looking at a suite of raises. We could expect potentially, although it's politically hot potato, a 1% increase in VAT, maybe even 2%. We saw in the Davies Tax Committee that the VAT increase of 3% would raise 45 billion rand. In order to raise the same amount of money, we would have to have a 6% increase in individual tax or a 5.2% in corporate tax. So I would very much doubt the corporate tax rates would increase because we just don't really have any room for that. We're already fairly high globally on the corporate tax rates. And so far as VAT is concerned, the African average is 15%. So we have a 1% potential additional amount to raise. And the impact of that could be around 5 billion rand and perhaps more with inflation. And from an individual's perspective, perhaps a rise from the current 41 to 42 or even 43, particularly at the higher ends. So that's the VAT and the income tax for individuals one would expect to increase. Along with that, your usual sin taxes, your usual fuel levy, potentially an increase in the securities transfer tax, which is when you when you move shares. Mm-hmm. Any number of things where he could pull some more income from taxes. I don't believe he should be looking at an increase in the debt too much. Yes. We already pay a lot in interest, 123 billion rand a year. Almost 4,000 rand a second we're paying in interest on debt at the moment, and debt is not the place to go, but obviously there may be nowhere else.
Deborah,
Finally, and I'm sure our economists...
Deborah, I'm just going to pause that because we were just getting expectations, and I'm pretty sure there's going to be a lot of conversations around this particular desk regarding tax. Let me come back to the Johannesburg studio where, Prof, you're here with me. Let's get your expectations. What are you going to be looking for in the Minister's speech?
Well, the first thing that the Minister is going to do is going to adopt an austerity budget. Basically, he's going to freeze new employment in the public sector. He's going to make sure that social grants are growing below inflation, which is a means of restrained government spending. Also, there will be efforts to try and contain wage increases in the public sector below inflation. But also, all these things, in my view, are not what I would support. Tax increases, yes, there will be a lot of tax increases, but I would like to see him talk more about this securities exchange tax, which is a financial activity tax and financial transactions taxes. And also, we need to begin seriously talking about the issue of exchange controls because there's a lot of money that is leaving the country. And then lastly, the issue of illegal or illicit capital flows. Yeah.
Fantastic. Trudi, let's get your expectations.
Okay. I think in line with what the other panelists have said, a lot of his imperative is to reassure investors, credit rating agencies, that there's still fiscal prudence in the system. So he'd be looking at the debt ratio, he'd be looking at the deficit, and I think the real benchmark would be against what was said in October in the medium-term statement. If there are any significant deviations, for instance, from the 3.3% deficit that was projected then, or from debt being under 45% in the medium term, then there would be a problem. He would really need to justify that, and I don't see that happening. I see him delivering those figures, more or less. Then the question becomes, how is he going to deliver those figures in an economy that's not growing? And so he would have to increase taxes, he would have to stick to the expenditure ceiling. I think if he was aggressive, he would try to reduce, to go beneath the expenditure ceiling, to have some room for maneuver, because obviously to compensate for tax. But I don't see how he could possibly go back on the wage settlement, which has been one of the main pressures on the budget. So I think he will stick to that and work around increasing taxes and freezing expenditure as it is. I think another theme that might come through is that even though he wants to reassure all of these, agencies in the short run, he's also got to demonstrate to everyone else, including the agencies themselves, that there's still room for growth in this budget, that it's supportive of growth and it's not going to completely undermine it. Obviously, there's a fear about tax increases, that obviously you're chilling things, you're chilling employment. I don't think people in the retail sector would be happy about reducing public sector employment, frankly. So I think you have to show that infrastructure development is going to drive growth going forward. So either emphasizing the kinds of projects that are going to be undertaken, but also how government is going to plan better for infrastructure projects.
Deborah, let's come back to you, because I think over the last couple of months, the key thing that we've been talking about is the ratings agencies. As we've seen Trudi now just talking about it and saying that we need the minister to reinstill that confidence. Just want to read a note that came through from RMB this morning, and they said that they are expecting a good budget and that the markets will respond positively, but they think that even with this positive budget, S&P come June, we might still see a ratings downgrade. Maybe talk to us about the importance of this, having a ratings downgrade still on the picture for you, or on the cards for you, and the implications.
Well, I very much hope not. That's why I said right at the beginning that this is a critical budget, in the sense that a ratings downgrade is not a good sign for the country. It's unlikely to promote growth going forward. It means that people will be less willing to invest in our country. It means that borrowings will be more expensive for the country. And as I mentioned, we're already making a significant contribution to interest payments. So a ratings downgrade is really not an option. And that is why we need Minister Pravin Gordhan to do something really fantastic in this budget, to show that the reins of the finances are in his hands and in Treasury's hands and the Reserve Bank's hands, and that they will be looking after the country insofar as the financial environment is concerned. We've shown for very many years fiscal discipline in this country, and I think that we need to demonstrate to the outsiders and internally that we can still demonstrate fiscal discipline in this country.
Prof, let me come to you. While we're still on the subject of slower economic growth, if we are going to be looking at a ratings downgrade, worst case scenario, what does this mean for our ability to attract foreign direct investment? And would this mean that South Africa will now be at the mercy of the likes of the IMF?
Yeah, it will be more expensive, because if you get a downgrade, it means your risk premium will be increased. So it means that the interest cost on the existing debt will rise. So, and it will be difficult for the country to absorb foreign direct investment. But my view is that South Africa really does not need foreign direct investment. There's a lot of cash in the banking system that is not reinvested into the real economy.
Talk to us about that. We don't need FDI, there's a lot of cash.
Exactly, because if you check, most companies have been able to do whatever sales that they can make during this recessionary period, but the cash that they've accumulated has not been translated into reinvestment because already there's excess capacity because of low demand. There's a recession. So there's no need for companies to invest and expand capacity because already we've got excess capacity. So there's cash in the banking system. And this process is called secular stagnation. So what needs to happen then is to mobilize those reserves in the banking system to finance the budget deficit, this debt, which, whether we like it or not, is going to rise. My estimate is that it's going to rise to above 55% of GDP. As we speak now, growth rate is down, which means that the interest cost on debt is going to add 1.5% in the debt deficit ratio. And as Trudi was saying, if he manages to announce a 3% increase, 3% deficit in his speech, then it's going to add another 3% on that. So it's going to rise, the debt GDP ratio is going to rise. And if the debt GDP ratio is the primary driver of ratings, there's no way that we can get out of this. It has been long coming because of weaknesses in the economy and so forth. And another
Yes.
point, the current account deficit as well is a constraint. It's a major constraint that we need to look at when we discuss the budget deficit and the budget.
Trudi, do you have anything to add to that? Because I know one of your key concerns here is what's going to happen to local businesses, local enterprises in the event or possible event of a downgrade, and also just looking at the speech.
I think, yeah, for businesses, this is obviously a risk factor, especially for those who tap international markets. But I mean, there'll also be secondary effects. Even smaller businesses will see that there's a tightening of conditions in the market. But one thing I want to caution around is the path from downgrade to IMF bailout.
Yes.
Because that has been bandied about a lot. And I think it's been a bit of an exaggeration. I mean, I'm not saying that it's inconceivable that there'll ever be a time when we go to the IMF. But one, let's remember that we've been here before. Early in our democracy, the IMF was offering to bail us out of the terrible finances that the new government inherited, and the government said no and sorted it out. So it's not clear that having terrible metrics means IMF bailout. The second point is that, as Chris has mentioned, most of the financing of the government's deficit is by local institutions. We owe ourselves, basically, and about 10% is foreign. Of course, there's also foreigners who own rand-denominated assets. So let's recall that we're talking about two different ratings. We might get a downgrade on the international currency, foreign currency downgrade, but not necessarily on the local currency downgrade, which is where most of our resources are. Our budget is also pretty progressive, forward-looking, so there's a lot to cut. If there was a crisis, I mean, we would start by cutting aid. Remember, we have foreign aid on our budget, believe it or not. We would be more restrictive in our investment because actually it's capital spending that drives the deficit. If you look at current spending versus current receipts, we're actually heading towards surplus. So there's so many other things that would have to be done before we get to IMF bailouts.
Okay, well, we've heard what the panelists have said in terms of their expectations. The CNBC Africa took to the streets to hear what everyday South Africans are expecting and hope to hear from the minister's speech today. Let's have a look.
So very simply for me, and I think this is what every South African is thinking, the funds definitely should go towards education. And I think if we invest in our education, this country will prosper.
Yeah, education only, not just for the fees must fall, basic education as well, because that is the platform and the basis that would allow the country to grow.
I think, currently at the moment, some sort of focus on the water crisis, some sort of focus on the water shortages, sorting out, the vacant positions that need to be filled.
I'm expecting more money to go to education, especially the higher education sector, because of what we have, gone through as a country, particularly last year.
Hopefully they will change things around because we actually require more funds to be pushed in towards education.
I think it should be allocated to housing, giving the thousands of people in our country roofs. It should be given for education to those who don't have access to education.
I think the money should go towards the Department of Arts and Culture. I think that a lot more budget needs to be put into roadworks and our roads.
I expect more money to go on education and on health, since we are struggling to get funds on on our fees and so on. Yeah, that's what I'm expecting of the budget speech of today.
Well, we've heard it from our everyday South Africans. Deborah, let's come to you. Before we go to break, just your reaction to what you are hearing from everyday South Africans. We are hearing education coming up quite often there.
Unfortunately, I didn't hear any of it. It didn't come through in this studio, so perhaps you can just give me a little rundown of what they said.
No problem, Deborah. We'll fix that for you in the next segment. In the next segment, we will be make sure that we try and get that up for you. Deborah, we will come back to you regarding that. So let's come to studio, where I know that you definitely have heard it, Prof. Education coming through very strongly there. What are your reactions to what you're hearing everyday South Africans saying that like to see?
Well, that's correct. Education, healthcare, social spending, and so forth. But as Trudi said, these things must be linked to infrastructure development, infrastructure in the education system, infrastructure in the health system, including training of teachers, training of nurses. We've got huge shortages, and that is job creation on its own. So, but also it's important that the minister must talk about local procurement, because pumping money into the education system and absorbing imports is not going to create industries and lead to job creation.
Trudi, your reaction?
Yeah, I mean, I think it's fair enough. And also, Pravin Gordhan had also said that he will ensure that social spending grows in real terms. That's the promise that he's made. Whether that's still possible, I don't know. So it's not that we should worry that there are going to be cuts in those areas. He did mention an intriguing suggestion that he would also find ways or think about ways where the private sector can participate in those sectors, almost as a complement to government provision. I mean, you're already seeing it at a small scale level where there are private education chains, private healthcare. The only problem becomes about the incentive of those private institutions and whether they're pricing at the right level, if it's affordable to the majority, which is where I think the gaps lie. I think, the Fiscal and Finance Commission released a very extensive report for this budget, trying to look at ways that infrastructure spending towards early childhood development, healthcare, can be made more effective. How do you incentivize local officials, because actually really we're talking about municipalities here, to spend money more efficiently. So I think that will be very important.
Well, we're going to pause this discussion. When we come back, we've been talking about the growth prospects, but what about where we're going to get the money from? A tax is said to be one of the big features in this year's budget. Do stay with us. We'll have a lot more coming up right after this. Welcome back. Of course, we still are talking about budget expectations. CNBC Africa's reporter, that's Aviwe Mdila, spoke to people with vested interest in foreign direct investments in the country and what they are hoping for in the minister's budget speech.
Rajan Pillay settling down at work in his offices in Sandton, Johannesburg. A bit anxious perhaps ahead of the eagerly awaited South African budget speech. He is the CEO of a company that brings foreign investors to Southern Africa. The speech will influence his business. Pillay hopes this will be a positive influence.
The investors are going to look very keenly at the budget speech tomorrow, particularly in line with what has been happening with the currency for the last 2 months. So the political shifts and the change in the ministry, the finance ministry portfolio, has badly affected sentiment, especially with respect to overseas investors. And that was as reflected by the decline against the dollar and the pounds and against all major currencies. What overseas investors will now be looking for is a reasonable amount of stability, prudence, and conservatism.
The fear is that South Africa will be downgraded to junk. University professor Yanni Rousseau knows how serious this could be.
In terms of junk status, it means that every country in the world has what is called a credit risk rating. And your credit risk rating can either be investment grade or below investment grade, so-called junk status. And junk status means investors will be very hesitant to invest in your country. And if they invest in your country, they will ask for a much higher return. So amongst others, it will mean that our exchange rate will depreciate, and it means that interest rates in South Africa will have to increase.
In his speech, Pravin Gordhan faces 3 major challenges: cut expenditure, find more money by raising tax and privatization.
We'll have to see budget expenditure cuts. For one, we would want to hear the Minister of Finance saying there will not be a neo-presidential jet. We would like to hear the Minister of Finance saying government will only buy vehicles manufactured in South Africa for politicians. There's no reason to import cars for politicians. They can be very comfortable in a C-Class Mercedes or in a 3 Series BMW. At the same time, it will be necessary to raise interest rates. And with that, we want to see new plans on how this economy will be grown. I'm not in favor of higher VAT rates because higher VAT rates will impact very heavily on the poor because poor people pay VAT on everything that they buy and consume. So if it's necessary to raise taxes after we've seen the expenditure cuts, and I must stress, after we've seen the expenditure cuts, I'm in favor of higher income tax on high income earners, people earning over R1 million per annum and earning over R2 million per annum. I've worked out with Fani Joubert and Adele Breitenbach of UNISA that 2 new tax brackets on that type of income can give an extra R10 billion of income to the South African government. And then lastly, in terms of state-owned enterprises, I'm really in favor of just giving these things away. I think something like SAA is no longer salvageable. It would be cheaper for the government simply to give it away. Get rid of state-owned enterprises that just put the drain on taxpayers through subsidies from the government.
Let's quickly rush back to Mr. Pillay and find out what the current situation is with the investors.
The budget speech may determine the relationship investors have with the country. Pillay says this relationship may have already taken strain because of the recent shuffle of finance ministers.
What overseas investors will now be looking for is a reasonable amount of stability, prudence, and conservatism in this budget coming up tomorrow. Unfortunately, if they don't see a what we call a strong or a steady budget, we'll probably see the rand decline further against those currencies. One of our institutional investors, in fact, called us this morning. They have bonds on the market which need to be rolled over, 500 to 600 million rand worth of bonds which need to be rolled over. They want us to come up with a solution to them as to how we can be rolled over, but they don't want us to talk to them until after the budget is out of the way. So they want to get a little bit of certainty from the budget itself before engaging and spending further amounts of money or committing further amounts of money. And I think this will be typical of domestic investors and international investors.
Dubbed as the most important budget speech in South African history, it could make or break one of Africa's largest economies. Aviwe Mtila, CNBC Africa, Johannesburg.
Well, of course, we're going to take this discussion further, and still in studio with me, we've got Trudi, Makhaya, consulting economist at Mercantile Bank and associate professor of economics at the Wits University, that is Christopher Malikane. And in our Cape Town studio still, we've got Deborah Tickle, the director of international and corporate tax at KPMG. Deborah, let's pick up from an interesting point that Yanni Rousseau had actually mentioned in that insert, and it picks up from tax, because you made a couple of points there in the beginning of our discussion. He said that he's not in favor of higher VAT rates, that an increase in income tax for high income earners would be the more rational way to go. You mentioned in the beginning that in terms of VAT, we could even be looking at 3% because of the amount of revenue this is able to generate. Just talk to us a little bit more about that. I mean, what is the likelihood of us even having a VAT rate that would be around 3%, given that economic growth is so weak?
Okay, I basically quoted from the Davies Tax Commission report that the equivalent of a 3% increase in VAT rate would require, to raise the same amount of money, 6.2% increase in individual rates. I doubt that they would raise it 3%, but it could be a combination of VAT and income tax if Minister Gordhan can stomach the political aspects of raising the VAT rate, because we know there's quite a negative perception of raising VAT because, firstly, of the inflationary factors that would cause. Although we're bound to have inflation, the exchange rate in itself will cause inflation, so that's going to be on us anyway. And the second reason why he may not raise the VAT rate might be because of the political pressures. So if we were to be looking at an increase in VAT rate at all, I would suspect that it would be in the region of 1. And the reason why I say that is that if one looks at the average VAT rate within Africa, it is just above 15%. So an extra percent wouldn't put us out of line with Africa. Globally, the average is almost 16. So we would still be quite a bit below the global rate. And obviously it varies around the world. In Europe, for example, it's significantly higher. Alongside the VAT rate increase potentially would be an increase in income taxes. We have no doubt that that must be a place where he's going to look. But the problem is that if one looks at the number of people based on SARS stats that were issued last year, the number of people that have taxable income more than 5 million rand, for example, is 4,000 people. Now that's not a very many people to go for. When one considers that we have a population of 54 million, and one says that even over 500,000 rand, the taxable income, there are only just below 500,000 people. Those 500,000 people are paying 60% of the tax. So you're looking at 10% of the taxpayers, but 1% of the population paying 60% of the tax. So one has to ask, how much more is going to come from that additional 1% or 2%? Possibly, as was mentioned here, 5 billion rand. But that's not going to be enough to fill the big gap. So it has to be a combination of a number of things.
Prof, let's come to you. What do you think will be enough to fill the big gap? You mentioned at the top that you're interested in the securities exchange tax, because you do say yes to tax, but there are other areas that we could look at. Yes,
and we should not shy away from the corporate tax and the money that is getting out of the economy. We need a more comprehensive, redistributive tax policy that touches on everyone. But much as we can talk about the VAT and so forth, we need to also be careful not to kill the propensity to spend of the poor people in the country, because as we speak now, if you were to raise taxes for low-income earners, then that is going to basically kill their capacity to spend or their propensity to consume in the economy, and that is going to reduce the aggregate demand in the economy, and then we won't have growth. I'm very skeptical of government freezing spending, because that is going to feed back on demand and drive the economy towards a recession. I think, as Keynes said in his book, you need, in these instances, a redistributive, aggressive tax policy that is going to change the propensity to consume across classes and shift the propensity to consume towards poorer classes and less towards rich classes.
Trudi, are you in agreement with that? Prof says he doesn't think that government spending should be frozen. We should be more expansionary, if that's what I'm reading it correctly. And of course, we've been talking about the different options in terms of revenue generation. So looking at tax for corporates, I'm thinking about your small and medium enterprises here. Where do they fall in if we do see tax increases?
I think that the really small companies that would be exempt or that would face low tax rates, and I think that should remain the same. I think the larger companies that would obviously be able to absorb more taxes and don't need to be exempt. The problem is that we find that corporate tax receipts had been declining already in line with the recession. I mean, what's really been holding up tax receipts has been personal income tax, not corporate tax. So it's already suggesting that you have either companies that have lower revenue or are not making profits at all and are making losses. So I'd be very careful on the corporate tax, either big or small. I think given the economic conditions, it would be very difficult. I mean, I must disagree with Prof here, because obviously we're a young economy with significant developmental needs, so we need to be expansionary. But I think the circumstances we've lost the flexibility that we've had. We used a bit of that flexibility after the financial crisis. We were aggressive in our spending, but clearly we're hitting against some limits. I mean, even the numbers that Prof himself said, possibly in his estimation, 55% GDP ratio, debt to GDP ratio. That's quite high for, especially a very open, highly traded market like ours. So on one hand, there are things that would be ideal given our level of development. On the other hand, I think we've lost that space at the moment to be able to pursue those. So I think we still need to send a message that corporate tax can't change significantly. And I think we have to send a message of reducing expenditure in government, especially because even if theoretically you'd want expenditure could stimulate the economy, there's so much baggage around government spending at the moment in terms of efficiency and corruption. So it becomes very difficult to justify not freezing it when there's difficulty, to say, trust us this time, it would be more efficient. I mean, obviously it needs to become more efficient, but I think a cut is the right signal to send given these conditions.
Deborah, let me come back to you. Looking at the corporates, Prof was talking about managing leakage. Where we've got taxes that we could be, we could be collecting, but we're not. This issue around transfer pricing, base erosion, and profit shifting. Where are we with that? And can we say that if we do get this right, we would be able to, to accumulate as much money as we think? I spoke to a tax analyst earlier on today, and he was under the impression that if you look at BEPS and the transfer pricing, the amount of revenue that we would actually be able to get wouldn't really be that much.
I would probably agree. People like Christian Aid, etc., have made certain estimates as to how much is lost in transfer pricing or pricing that or goods that are sent in and out of the countries, or services that are in and out of countries at prices which are not considered to be arm's length and illicit trade, to be around about $120 billion. That is $120 billion worldwide. We're a very small economy, so what share of that would be ours? I do agree that one has to have transfer pricing rules. That means that companies that are engaging in cross-border transactions need to make sure that the pricing for those cross-border transactions is arm's length. And the global initiative, which is called the BEPS initiative, which is taking place at the moment, is redesigning the methodology to be applied to make sure that those companies do have the knowledge of how to determine what that arm's length price is. And I believe that the majority of companies, particularly the larger companies that are engaging in cross-border transactions, who are selling backwards and forwards and engaging in global trade, are attempting to make sure there is arm's length pricing. Just a point to be made here, in South Africa we have 229 companies only that have more than 100 million rands worth of taxable income. Now, if one looks at that, it's not that many companies, so our Revenue Authority doesn't have a particularly big job to keep a very good eye on those large companies to make sure that they are, for example, passing goods and services cross-border at arm's length. We have a saying in our firm that's responsible tax for the common good, and that basically means that taxpayers must be responsible in paying the right amount of tax, and government has the responsibility to spend it correctly so that those taxpayers have the motivation to pay the right amount of tax. And I do believe that under that mantra, both individuals and corporates should be able to pay the right amount of tax and should want to. And I think the point that was made earlier by Trudi about government spending and wasteful spending is very important, because taxpayers will want to pay the right amount of tax if they see the right things being spent on. So just to carry on, but if individuals, for example, are paying tax, and I said there's very few individuals who are paying significant amounts of tax, if they see that the government is spending on schools and security and hospitals in areas that are not where they live, for example, they will be happy to pay that. They're not uncomfortable to pay a higher tax rate, and we've seen that coming out from business people saying they're happy to have a higher tax rate, but the spending must be done well. It mustn't be wasteful, and there mustn't be overspending on the wrong things.
Prof, let's come to you before we go to break. Obviously, we do have Deborah echoing what Trudi had to say with regards to government spend. It must be done in a proper way, and we need to have confidence that it's going to go to the right places. I saw you nodding your head in agreement with Deborah over a couple of points. What were those points that stood out for you?
Basically, the point that says that people will be willing to pay taxes if government is spending in developmental projects like schools, hospitals and so forth. The issue here is that the country has got huge backlogs, huge deficits. Our people have inherited huge deficits. For the past 20 years or so, they've been patient. Students have been patient. And a window came and closed. It's a crisis now, and it's during this crisis that solutions must be found to the historical leakage that we have. We can't continue as though people are not in deficit, have not been in a historical deficit. This deficit cannot be resolved on the back of the same people who suffered under apartheid. So we need a more progressive intervention.
Trudi, we're going to pick up with you straight after the break. Do stay with us, because when we come back, of course, we'll continue this discussion with regards to budget expectations for 2016. Welcome back. You're still right here on CNBC Africa, and we are talking about budget expectations. But of course, we do like to keep a close eye on market movements. We did see the banking sector that came under pressure in early morning trade when we opened up this morning. Of course, the all-share index was also under pressure, but we will be focusing on the local unit, which has been an outperformer over the past couple of days in terms of its other emerging market currencies. So far, we are sitting at 15 Rand 33, bearing in mind that this morning at the opening of the bell, we were sitting at around 15 Rand 22 to the good. We had strengthened to as much as 15 Rand 15 in the previous trading session. So we certainly are seeing a lot of volatility and movement happening around here. The all-share index, let's take a look at how we are faring there. We have now dipped below that 48,000 mark, so 47,481 points. We are almost 2% weaker is where we currently are. Let's now go to social media, because as you can imagine, Twitter is ablaze, and the budget 2016 is very much top of mind for a lot of individuals. Let's take a look at what is happening on that front. There's just a couple of things that we've got on social media. There are a lot of questions being asked, how the mess is going to be cleaned up, where we're going to be finding the money from. But of course, I'm still joined by my panel of experts, and we did say before the break that we will be speaking to Trudi, or she'll be picking up. I know there's one area that you wanted to be looking at, and that is the developmental deficit. Just tell us exactly what you mean by that.
Okay, so I wanted to pick up on what Prof was saying around the idea that we have this backlog and people have been very patient. And I think in that discussion, there's often this divergence to say this is what the rating agencies care about and these are the developmental needs in the country. But we also have to get to a point where we have to be aware that the rating agencies or foreign investors see the same footage that everyone else sees. So even in their ratings opinions, S&P, for instance, and Fitch have talked about social unrest, they've talked about inequality, they've talked about skills shortages in the economy. So it's not as if we could put up pretty numbers in the short term and they're not aware of what's bubbling under the surface. I think they also want to see that dealt with. So I think to deal with those issues is not out of the bounds of what investors themselves want to see, because they want us to solve our problems for ourselves. They don't want us to sell them a picture that works in the short term but not in the long term.
Deborah, let me come to you. Trudi is talking about solving problems ourselves. I just want to go back to the tax issue, and this is with regarding any increases that we can expect when it comes to customs duty. Would this solve our issue in terms of protecting those industries that aren't very competitive? Is this something that you'll be looking out for, and maybe what's your stance on increasing customs duties?
I believe that the normal sin taxes are going to be increased, which is more excise duties than customs duties. Insofar as protecting industries that are here, one must remember that there are already customs duties on most products where there is local manufacture. So the question is, are those products where there is local manufacture and they're imported, is that going to increase, or are they going to remain the same? And quite frankly, we're a net importer of product. So that would suggest that we don't really have enough product in our country that's being produced to actually sustain us. And if we push the customs duty up, then what will happen is, together with the other increases in inflationary pressure, like the rand rate in any event, it will cause prices to go up. So people complain and say, well, we shouldn't be increasing the VAT rate, and yet they seem to be quite happy that we've got an increased rand rate, in other words, more rands to buy every dollar, every pound, and that's going to cause us to pay more for our goods and will therefore cause us to have inflation in this country. And when people say customs duty, they say, no, well, we must protect local industry. But the reality is that we will continue to import very many goods, and by pushing up the customs duty, it will simply make them more expensive. So my view is that that isn't necessarily the right place to be looking for the additional taxes. At the end of the day, the only way we can grow taxes in this country is to have increased growth. Minister Pravin Gordhan, in the budget speech just prior to him leaving the previous occasion, stated that we needed 5% growth in this country per annum in order to achieve the NDP objectives. The NDP objectives being jobs, education, health, infrastructure, environment, etc., etc. We have below 1% at the moment. Serious changes need to take place to enable our country to grow.
Prof, let's come to you. A lot of spending pressures that we need to be dealing with. Deborah was talking about a couple of things, education, and of course what comes to mind is the Fees Must Fall campaign that took place. This is going to be yet another pressure that we need to deal with. I don't know your views in terms of how all of this is going to come into the fold.
Yes, that's what I was talking about, that we need to mobilize resources within the country, particularly the reserves that are in the banking system that are basically not being reinvested in the real economy. They must be channeled towards financing these developmental initiatives.
Why are we not able to unlock that? It's locked in there somewhere, so what's the problem?
In my view, it's about macroeconomic policy and how government has decided to manage the economy. There's heavy reliance on private ownership and private regulation, self-regulation of the economy. The role of government, the policymakers see the role of government as simply to make the environment conducive for the private sector to thrive. They don't see themselves as having a state that is interventionist, that is also a player in the economy. For example, some of us have been arguing strongly for the state bank to be established in South Africa to mobilize resources for development purposes. That has not taken place. Now you rely heavily on a banking system that is predominantly foreign owned, for that matter. And that constrains you in how you can control the resources that are in that system for developmental purposes. You've got rural areas, for example, where children to this day are still studying or learning under trees, for example. Who is going to develop that? Who is going to fund that developmental gap if it's not the resources that are already existing in the country? Our mining sector was supposed to play that role of putting in resources for development, the banking system, the big companies that are now foreign owned. So basically, we heavily rely on the private sector for developmental purposes. It's not going to work. You need a very strong intervention state to change the situation.
Do you agree, Trudi? Is South Africa maybe a little too obsessed with privatization? In our previous insert, we heard Professor Yanni Rousseau with regarding to state-owned entities saying, just do away with them.
Yeah, I mean, I think we've had the Presidential Review Commission on State-Owned Enterprises, which I think is more nuanced to say some are clearly not serving any developmental need and should be privatized. Others are serving a developmental need, but they're not efficient, that should be improved, and also that there are parts that can be used or hived off for private participation, not ownership, private operation, not ownership. So I think there are lots of things you can do in conjunction with the private sector to achieve that. I think when it comes to intervention, there's a lot of learning that has accumulated over time as to what kinds of interventions work and which ones don't. So, I mean, if there was going to be wholesale state ownership at this stage in the economy's development, I think it probably would not work particularly well. I mean, in many ways, the apartheid government did that, you know, developed the Sasols, the metal steels, etc. And that was important at the level of development. But then it hits a plateau. So one has to be careful about that and also to choose the investments carefully if that's the route that's going to be taken. So I think we need to learn from our own past experience globally what kind of state intervention works and which one is appropriate to the market. If you look at Southeast Asia, they found a model that works within their culture, within their context, which is very much driven by the state working hand in hand with private corporations, but the state given the right incentives to ensure that its intervention actually does encourage companies to work well. So what I'm saying is that, for instance, if it's going to be about investing in particular sectors, one has to choose those sectors carefully, but also ensure that you're getting returns out of that, rather than creating havens for inefficiency and incompetence, because that's the other risk. So I think those learnings should come into play if we're going to have more intervention. I think the other part is that we do need to double this economy. Grow it much more aggressively than it has, and inevitably that involves significant private sector participation, but the catalyst can be government.
Trudi, I'm going to stop you there, Prof. I will come to you. I just quickly want to go to Cape Town, where Deborah is standing by. Deborah, of course, you've been listening, and we've been hearing about interventions that are working. We need to be talking about investment and which sectors we need to be investing in. We've been talking about generating this cash by means of taxes. In your view, what type of interventions do you think would probably work, and where should this money go?
If we're talking about tax, then there is a theory, and it was mooted in both the Katz and the Margot commissions, that tax is not the place to encourage. In other words, you don't use that as an incentive. Tax should be there as a tax, and there should be other means of incentivizing. However, if you go into our legislation, there are lots of places that areas of business are incentivized. For example, at the moment, small business, research and development, etc., etc. So those areas are already there, but I would say that one shouldn't really use them too much to try and develop industry. At the end of the day, if the tax is not the main reason people invest in a country, it can be one of the factors, and obviously the lower the tax rate, the more of a factor it becomes. But at the end of the day, we're not in a position to lower tax rates at this point. We would need significant policy changes within the country that would create an environment to lower corporate taxes for everybody, not just foreign investors. A place where there can be intervention, and this is an interesting one, and we've seen a lot of it in the paper in the last couple of days, is the question of should there be an amnesty on people's money which sits in Swiss bank accounts, for example, where there's a historic situation, money has been taken out of the country illegally, potentially, not declared to the taxman, and they're too frightened to declare it because it will put them in a difficult position. Over the next few years, it is likely that because of the exchange of information, agreements that are being reached with various different countries, that money will be found in any event. But perhaps we need that money more quickly, and one of the suggestions has been made that perhaps there needs to be an amnesty on those people. It's perceived to be wealthy people, it's perceived to be a lot of money that's sitting there, and perhaps we should be saying, come clean, tell us about your money, pay X% of it, and going forward you will pay tax on any income generated from it. That could potentially provide a fair amount of tax. Whether that's something the government wants to do or not is a big question, because we have had amnesties before, and why always reward the people who did things wrong rather than the people who did things right? But at the end of the day, we're stuck in a position where we have to generate cash to fulfill our fiscal obligations We have social grants that need to be fulfilled. We have education, health. We keep saying the same things. So
Deborah,
maybe it's one of the sources.
Deborah, I just want to get some closing comments because we have about less than a minute, but I know, Prof, you had a burning comment that you wanted to make whilst Trudi was talking. I don't know if you can recall that.
Yeah, basically what I want to say is that if we want to double this economy, the best way to do it is to industrialize. We cannot double it by growing it at 10% per annum. It won't work. We need to industrialize and add more value to our raw minerals, which means that we need control over our mining sector, and we need control over our financial system to finance industrialization and to create jobs downstream. That's the only way we can double the economy and double the tax base. It's through changing the structure of the economy.
Thank you so much, ladies and gentlemen, for coming in. A lot to take into account with regards to today's budget, but we did get your expectations. And I can tell you time flies when one is having fun and getting some insights with regards to what the Finance Minister might say and what we should be looking out to. But a very big thank you to Trudi Makhaya, a consulting economist at Mercantile Bank, and Professor Christopher Malikane, an associate professor of economics at Wits University. And of course, not forgetting Deborah Tickle, the Director of International and Corporate Tax at KPMG, who joined us from our studios in Cape Town. In a moment, CNBC Africa will be returning with a live broadcast of the Minister of Finance's 2016 budget speech. Stay with us.
He managed South Africa through real expansion of borrowing, but this year, Pravin aims to curb spending, a balancing act to appease ratings agencies and clean up SOEs. This 2016, Pravin is back, presiding over our most important budget yet. Is this the year of measures and implementation of fiscal discipline and learning to live lean? This is the year of the whip, the year to live within our means. This is SA Budget 2016.